The numbers weren't particularly inspiring today. We had flat core retail sales and a revision down for December. We had a contraction in manufacturing production. Are these maybe early signs that the expansion is getting a little tired?
No, I don't think so. I mean, there are always going to be volatility in some of the monthly numbers. I think you have to take a little bit longer perspective. And if you look at the underlying fundamentals for the U.S. economy, they're pretty good, right? The consumer side has been holding up. Yeah, there's volatility in some of the numbers, but all in all, the fundamentals of higher income, household balance sheets look good. The jobs market has been, quite good. So I think the consumer side is holding up. The business side has been weak. We've had some signs of stabilization in the manufacturing side, so that's a good thing, notwithstanding today's numbers. That's kind of the way the U.S. economy has been. The consumer side has been driving things. The business side, for a number of reasons, has been weaker. But again, that looks like it's stabilizing too, and I expect it to pick up later in the year.
Has your forecast for growth for 2020 changed at all since the last time you submitted it in December?
Yeah. I mean, I think that, we now have some new risks, including the coronavirus, so you have to take that into account when you're thinking about growth. But right now I'm thinking of that as a risk. I expect that certainly in China and perhaps in Asia, the first quarter numbers are going to be weaker. There could be spillover to the U.S. economy as well in the first quarter, and it remains to be seen by how much and for how long that'll persist. But in general, right, I'm seeing that as a risk to my forecast. I haven't marked down my forecast because of it.
Have your people been able to put any kind of numbers on the risk from the coronavirus?
It's very difficult. I mean, usually the private sector numbers that I've seen are based on what was true with the SARS epidemic. But the world's a lot different than it was in 2003. For one thing, China is a much bigger part of the global economy than it was then. On the other hand, China is also a wealthier country than it was then, and they've already taken steps to try to limit the fallout, as have other countries. So it's very hard to make those comparisons at this point. Right now, we're just sort of evaluating number of cases like everyone else is, and then trying to figure out how much impact it'll have on the U.S. economy. Our focus is on the U.S.
You mentioned the manufacturing production contraction that we saw in January. Your district is the heart of manufacturing in this country. What are you hearing from factory owners and workers in your district?
Right. So all in all, the manufacturers in our district are saying they don't see things falling off the cliff at all. They're not worried about recession. On the other hand, they don't think things are necessarily going to pick up a lot. So, it's steady. Orders are coming in, but nothing to write home about, higher or lower. It's just basically steady as she goes.
So the trade deal phase one not going to make a difference in terms of business investment?
I think it's too early to see. I mean, certainly the good thing about that signing of that deal is that some of the uncertainty around trade has gone down, but it's too early to evaluate whether we're going to see a pickup or how much of a pickup in investment because of the diminution of the uncertainty.
Well, bottom line then, Wall Street is betting that you guys are going to cut rates again this year. Are they out over their skis on that one?
Well, I think as is true whenever we go to FOMC meetings, we evaluate the economic information that we glean from our district contacts and also the data. We look at what financial market signals are telling us as well, and then we make a judgment about where policy is. Right? We've told the last FOMC meeting and the chair's remarks in the press conference is that we think policy is in a good place. I certainly agree with that. Inflation is low, labor markets are strong. Right? The economy appears to be growing at around trend of 2%. And that gives us sort of a baseline to sort of watch and look and evaluate, and then we'll determine whether policy needs to move one way or the other going forward.